Hey everybody, welcome back to the channel. I hope you all had a great weekend and you're ready for again another busy week in the markets. I know we're still range bound. I know it's been a little troublesome to navigate, but just so you know, I like to go through a few names to kind of cover my weekly watch list every single Sunday. And if you'd like to receive my watch list a day or two in advance, make sure you follow me on X. That way you're able to kind of go in and pre-analyze to see how your results then compare with mine whenever my video gets released. I also released a checklist market guide infographic, and the purpose of that is so you have a guide to also help you distinguish all of the confluences that I like to see whenever I'm charting. I recommend you use this guide to have next to you or however you want to have it printed out if you'd like, and go through the charts and see how many things you can check off. The more you can check off, the better the trade outcome will be. None of this is financial advice. This is just me sharing how I am willing to approach the market this week based off of the names that I am watching. So hopefully it adds a few ideas to your own watch list. So let's just go ahead and dive right into it. I will say this week's watch list is a little bit shorter as I'm trying to keep a more refined list just due to the fact, we've been getting all this crazy volatility and we are still range bound. So I kind of want to keep my list a little bit smaller and compact based off of a few setups that I'm seeing. So to start us off, we have KHC, ketchup, basically. And what I really like about this is that after we got this aggressive monthly low, because we did gap down into it, we've been in a structural downtrend since July of 2025. And you can see it if you draw it out, right? It's a very clean downtrend. It hasn't really like changed or whatever. It's been very clean up until recently. Back in January, late January actually, you got a very nice lower high, lower low, lower high to a lower low to establish those previous month lows off of a gap down. And then price creates a new expansion leg. So the change in your state of delivery accelerated after the new lows into new higher highs. So from a structural standpoint, price is now trying to change its objective because we went from lower highs to lower lows to then higher highs based off of this daily expansion leg. So now what I'm looking for is whether or not we're going to get some kind of staircase compression here, which you've seen, Ketchup do in the past. It can go through that. So a scenario I'm keeping an eye on, if we don't push through like 25, I'm keeping an eye on a potential you don't even need this right here, but I'm keeping an eye on a potential staircase where you sweep down into this 22, 23, and then accelerate into 26, 27. This would be the ideal path. Again, it doesn't have to, and the reason why I have this other one is in case you do reject and go for another driver down. It would be really clean to see us sweep these lows into the inversion and also give us a true discount off of that initial structural shift. Because as you know, when you are changing that trend, right, if you go from here to here to here, if this is going to be the internal of the external retracement, I would like to see some, higher time frame sweeps. So like I am looking to see if we do get some kind of corrective move into about 23, 22.8 to establish a really nice low to then deliver into 26, 27. Now, this scenario doesn't have to happen if we do manage to climb back above that 25 mark. Okay, there's a lot of support on ketchup as long as we stay above 22.5, 22.6 in my opinion. Really good buildup in terms of positioning that I would like to see carry out into like 27, somewhere around uh, May, June, July timeframe. Next up on the list, oh, and also, my bad, I guess I skipped this out, but like based off of this too, you have really good deviation targets that also target a lot of this engineered liquidity, right? So it'll take time, but I do think as long as we can continue to develop above 22.5, 22.6, I do think the end goal is somewhere in the 27s, as that does clean up a lot of this LRLR slash engineered liquidity on your higher time frames. Next up on the list is UNH, and this one is a bit of a 4-hour diagram here. And I do really like the fact that we created exhaustive lows here, which also were defined as our previous week lows, against this really nice counter 4 hour. We came back to rebalance and then continued to displace back up into an outside week. And now what I like is I like UNH as long as we can stay above 280. 280. I mean, you can even go as far as like 275. That would be pushing it a little bit, in my opinion. But you can also like extrapolate the 618 from the 4 hour if you really wanted to. Coming here and discount, right? So like 275, 282. That's kind of my range. Whether or not you build from here, I mean, there's still a potential for us to kind of engineer a little bit more down into that. It doesn't have to though, just the way we're building really, really nicely. But overall, I do have a bullish bias on UNH, and I would like to see this characteristic change continue its momentum because if we are going to be hunting buy side, I would like to see this last really nice higher time frame established low get tested, right? And it will kind of act as a nice SR flip, which lines up with our -2 and -2.5 based off of our initial hourly deviation change here, right? You got your push up, sweeps of the low, created an exhaustive low after rebalancing your orders, and then continue to displace and expand into those outside weeks. Now you're kind of getting some internal development of the overall higher time frame. So if this is going to be all part of one expansion, you know there can be internal structure within that. And I do think if we can stay above, again, 275, 279 is a bit of a stretch. I don't know if we actually get that low. But if we can continue to develop above this, I do think it's viable to trade back up into 300 and potentially 310. Really good internal development that I do think creates a domino effect into the higher time frames. Next up on the list is CCJ, and I really like this one because, so I'll go back and show you silver real quick. And there was some really good inflow that came into silver, and you are now trying to expand through that previous week high against a gap, right? And you almost went outside week. So you got now a really nice 1-2 down rev that could give you follow through back up into 84. And when I see this kind of chart, right, where you have a really nice low that then gets swept and then you completely reverse, right? This looks like a really nice undercut or a really nice manipulation leg, especially if I zoom into the 4 hour, right? You have a really nice base being built. So you have a really nice base. You undercut the base, known as your manipulation leg or your liquidity sweep, a raid of stops, and then you aggressively deliver back up. So to me, this looks like a very nice and uniform power of 3 that I do think maybe pushes you up higher. The retest comes in and you develop up into like 90, 95 within the next 2 months. I really like how this is playing out. And then this is kind of what plays out into the CCJ chart, right? If we have a really nice structural power of 3, aka also known as your accumulation, manipulation, distribution, right? And on this distribution leg, I would like to see a really nice move that then retraces against previous week high and runs up into those 90s. It looks really, really good. So then when I go back to CCJ, you can kind of see the evidence behind this, and I'll show you on the daily, right? You have a previous all-time high breaker that's now being utilized against the discount of your swing. So from your last expansion low into the expansion high, look at how price has started to compress back into your discount against your all-time high breaker. So with how this is looking, right, you didn't get a full-on close through previous week high. You did kind of reject where you needed to, rebalance the orders against a previous high. You could still be stuck in some form of like internal range. But now with this previous week high, what we have to watch for is, do we get immediate continuation into 129, 130, or do we create some kind of little sweep that then manipulates against previous week low, meaning we don't actually take this out, right? So there's a lot of scenarios here, but I think all of this internal buildup is still bullish, right? Do we get immediate continuation into 130? Do you go down for a previous day low, or do you go for one more driver in a discount that then creates a really, really clean RR low? So there's a lot of ways, especially with how volatile silver and all the names within the gold can trade out. I still really like this for a trade, especially with the inflows that started to come into silver. Really, really good positioning for it that started to come in on Thursday and Friday of last week. THM is also another similar one, and when I go into 4 hour, this looks really, really pretty, right? And I really like, again, I really like these sweeps against supportive breakers, right? Basically, you're now newly defined refined demand. Again, this is where you kind of rejected to get through for nearly an entire month until you finally had an aggressive breakout. And now what you're doing is you're pretty much just coming back into discount here, right? This expansion low, expansion high. If I grab my true OTE, see what I mean? I mean, you can even use the daily leg if you want. Like you can use the whole daily leg, but you're still within your discounted range here. We'll just do this like this, go back into the 4 hour. So like, see what I mean? Like really, really pretty confluences. And now you have a really nice inside force. So you kind of consolidate underneath. But if this breaks out, I put THM into the low threes early on. And similar to silver and CCJ, we just have to kind of watch to see if either you break through this with a gap up or you kind of get a small gap down, which I do think can become a viable gap or retest if you're not quite ready yet. One of my favorite charts is Walmart just because of the correlation in its structure of its own, right? And I'll walk you through it. So, high, establish a sweep, expand. Establish a high, retest your previous high, expand. Retrace within the overall structure, retrace your previous high, expand. So, from a theoretical standpoint of just structure in general, Walmart looks really pretty because every expansion leads to a breaker retest. Every expansion leads to a breaker retest. Every expansion leads to a breaker retest. Now, the only problem with this retracement as opposed to the most recent retracements is that this one was a bit more aggressive. And you guys know that whenever I talk about, you know, returning back into discount or getting some form of higher low or lower high depending on your trend, right? If we were in a downtrend, we would be looking for those lower high retests. But in this case, we I like to see those retracements kind of compress and engineer liquidity, right? I like to see that staircase compression where you're kind of building it methodically, right? And you're establishing really clean pivots of liquidity, whether from the lower the lower highs or the lower lows, depending on how you're trading this, right? I don't like to see price aggressively return back into those points of interest where we have those, structural PD arrays or demand support, supply, discount, all that stuff, right? Whenever we're coming back into that point of interest of confluence, we like to see it compress, slow, engineer methodically, right? I don't like seeing aggressive moves because this is now harder to create reversals off of just because the pivots are a lot harder for price to run through, right? So when I'm looking at Walmart, yes, we are back into a previous month high breaker and we are at our discount of our last swing low to swing high of the expansion leg. The only problem is it's like look how aggressive you delivered back into it. So with how it's looking, you do have to be a little cautious, but I still think it's worth a shot relative to that 119. Because if this trades out, I do think you could potentially get another run back up into like 130. So I personally think the risk to reward is really good because it's literally like $2 to $3 risk for a 8+ reward. Really, really nice odds there. So keep an eye on Walmart as you develop against this like 118, 119 zone. See if you can continue to respect the overall integrity of its structure. It's been really, really clean. It's moved really, really well through each of those zones and each of those retracements, after those expansion legs give you really good opportunity. So I'm looking to see if this structure stays intact and if the integrity of this higher low against that monthly breaker can give you that expansion out of your optimal trade entry. Next up on the list is Meta. And similar to Walmart, this is also setting up relative to its swing low, swing high, right? Again, guys, a lot of the way I trade is very, very similar. I'm looking for those aggressive expansions that then give you the corrective retracement that no one wants to buy off the higher low to then trade it back up. Because remember, in structure, the most optimal trade to buy something is literally on the retracement of the overall trend, right? You can get close to it, whatever. You might not pinpoint the near low of that, but as price retraces, you can create that point of interest. You can create that blueprint, that overall range of where price can retrace to. And that's the whole purpose of why I use Fibonacci's. It gives me a range so long as I understand the trend to where price can come back. And then I build those confluences. Is there a gap? Is there some form of PD array? Is there support? Right? Is there some kind of SR flip? Is it a previous high? This is why I bring up my checklist at the beginning of my videos, because all of the things that I look for when I'm charting are in that checklist. Whenever I'm building out a watch list, I'm using that checklist. Obviously, there's things that I favor and tailor to more, as you've seen through a lot of these watch list videos and or a lot of the names we've covered today. There's a lot of similarities between them. Because when you can find that identifiable range of where price could potentially create a nice established low, you then get rewarded, right? And it doesn't have to always go from a higher low to higher high, but as long as you understand liquidity and where price can run through, right? Again, like if this is where Meta is going to displace, because you saw this potential displacement here, you kind of wicked off a little bit. But if we go into the 4 hour, right? Okay, can we now stay above 645 due to the delivery of this off of a nice sweep into a supportive gap, gap up, support buyers, and then look at how price delivers. So if Meta can stay above this little zone here, which is like 645, can we now build here to deliver and run up into like 690, 699, somewhere around there? Because we know that this lines up with a previous week high, and you have a really nice daily inefficiency here to potentially rebalance against your overall low. And if you do that within the bigger degree, you could do something like this and then maybe return and whatever. And then you have some kind of like 4 hour inverse head and shoulders that creates your internal, buy side of the curve, and then et cetera, et cetera. Like there's so many ways to approach it, but it's just understanding those little key things. Let me come and just annotate this because I like to have notes, right? So do we get some kind of little internal reset before higher? And if not, can we continue on up into our first designated target of 682 and then 690 and then maybe even somewhere like literally right under 700? But structurally wise, when I show you this chart, this looks really good. Sure, you didn't deliver the way you wanted to, but look at how price is responding when you do get into the discount. That's another thing, right? If you are going to get those aggressive redeliveries back, okay, when you get into that point of interest, what is price doing? What is the context of price? How is price responding? Are you getting candles that start to slow the overall development into that? Right? You aggressively push from 680 to 630, but then you stalled and then you immediately started to counter it. Those are the kinds of things you need to be paying attention to. Okay. So I really like Meta against this daily and 4 hour. You are showing some intent against that previous week low sweep. So I would, if this is going to be a true discount, I would like to see price now stay above 645. And if you do get like another sweep into the gap, I would like to see it happen quickly. So you come down into the gap and then materialize back into the range, then that becomes a really nice manipulation candle that I would like to utilize to then trade back up into 680 plus. Next up on my list is ENPH, and this one is pretty straightforward, similar to Meta. I'll show you the 2-day chart just because it's a little cleaner. The 2-day chart is super, super nice. So you have some really good Wyckoff accumulation here against your manipulation and or spring, and then look at how price from this broadening low develops into new broadening highs And then against the 4 hour swing low to swing high, you are now in a really good earnings catalyst gap. And basically, you are a double inside 2 day. I mean, wait. Oh, yeah, you are. This is a really clean double inside 2 day against that daily discount slash breaker slash gap up slash discount slash previous month high. Look at how many things I just gave you worth of confluence, right? Really good supply range highs against your last known. It's right around here. Look at how price is developing against your last known local highs of the overall like Wyckoff here, right? So now you're kind of flagging into this, and I do think you might pin a little bit in between 41 and 45, but regardless, I do think if there is one more leg lower, you do something like this and then run up into 50, 52, 56. And if there's no sweep, you're going to kind of compress here, and then you just wait for the first displacement leg to create some kind of manipulation. But overall, I am pretty bullish on M phase. I think this 2 day chart looks phenomenal. Double inside 2 day against a lot of supportive confluences. My next target would be up into that like 54 and 57 area. So keep an eye on this to develop into like, March, April timeframe. Looks super good. One of my favorite charts going into this week, actually. And then also you have that higher time frame, LR as well to kind of run through. And I just really like the overall shift in your structure here, because I mean the way this is looking, this definitely looks like it's wanting nothing but buy side. You just have to catch those retracements that conform to the intent or integrity of this structure. Looks super clean though, like I can't lie. It's one of my favorite charts headed into this week, and I'll probably post this on the X later. Next up on the list is just more of a momentum trade here, and this is MU. I really like this overall buildup and relative strength against the market. I mean, if I show you the weekly, you're double inside on the week, right? You have really good buildup, similar to SNDK. I mean, SNDK and MU both have really, really clean structure. If I show you SNDK on the 4 hour, you could see how you kind of manipulate. So you go here, 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 and then here. You can come in and draw your like 2 hour discount zone. So if we're establishing a really nice higher low here against that supportive gap, I do think this can trade back up into 730, 766. Same way for MU, right? It's just MU showing a little bit more strength. And if this is going to be a range, regardless, MU has really good support right now in between that 394 and 370 area. And we're going to go and color code this green. Demand ranges like that. If you do manage to get a sweep against this little upper extremity here, if you do not manage to reclaim previous week high, you could be in for like a little dip and rip type thing. But overall, relative to the market, MU's just been holding up its range. And remember, you don't have to always correct through price. You can correct through time, because this is killing premium on both ends, right? It's an absorption of both buyers and sellers. But remember, the key to understanding absorption phases is how did price deliver into it? Because a lot of the times price will trade out the same way it traded in, right? So when you have something like this and you're just kind of correcting through time and you're just killing both sides, price came from down up. Price will trade from down up, right? It will trade out the same way it traded it in. So that's a cool little tip whenever you do find yourself in these consolidation or compression zones, is identifying your point of interest first off, identifying if price manipulates, and then understanding the context of price delivery. How did we get into this compression or consolidation? Because more times than not, you will trade out the same way you traded in. So this is more of a momentum trade relative to its underlying strength against the market. Similar to SNDK, I do think both of them can continue their expansion against this little consolidation absorption phase that they're in. Double inside week as well. Do not sleep on those. Those are very powerful strat setups. And finally on the list is just a really pretty Wyckoff accumulation chart, and SBUX just has so much to like about it. Really nice manipulation like here that then expanded into new highs, and then you kind of just developed and consolidated before you broke out higher. This is also another good example of what we just covered with MU. Price will trade out the same way it traded in. Price will trade out the same way it traded in. Does that make sense? We went from a swing low to swing high, aggressively displaced, down, up. Then we were stuck in a range. And how did we trade out? Down, up. So now we have a really good higher time frame SR flip with supportive discount, regardless of what Starbucks does. As long as we now stay above 88, 89, I have a really nice higher time frame target pre-ER into about 110, 116. I think now the next like expansion that it's in, regardless of how you do it, I think it's trying to now prep for about that 111 area. Looks really, really clean overall. This one's more going to come down to identifying those range low buys, because you get a lot of displacement within the consolidation or absorption phase that you're in. So it's just more about identifying those retracements that overall respect this consolidation or like range. And that's why we've identified the 89 and 91. And we also understand that in between that is also your golden pocket of this last manipulation daily that expanded into those monthly highs. And now you're kind of consolidating against all that, right? Look at your monthly, you're still inside on the month, and you have some really nice weekly compression going on. And we know that these phases can literally last about what, a month and a half. So now that you've created that establishment since late January, we do know that we could kind of be stuck in this range for maybe another month or so. I would just pay attention to Starbucks on the lower end of that range, because eventually I do think this runs back up into 110. And I mean, you're even more than welcome to build out like June 110s, June 115s, because I do think they have the potential to go in the money. Just looks like really pretty development overall. This would invalidate for me if you do get like a daily or weekly close under 87 personally. And yeah, that concludes my watch list. Remember, y'all, I do this to hopefully help paint a new light in how you see price action and maybe give you a little bit more information to how I chart. I actually ended up going the full 30 minutes with half of the names that I usually cover. Hopefully today's detail, as I did try to pay more attention to it, gives you a bit more insight and helps you along the way. So please continue to support my page. I do appreciate everyone who's been with me throughout this entire journey. I will also probably start recording my educational series, as at this point I think I'm just better off posting them than waiting. It doesn't really do us any benefit. So keep an eye on the release date for that as well. But I am probably going to just start going ahead to post more content, more educational content, along with the watch list videos every Sunday. So yeah, hopefully you guys continue to enjoy these, and thumbs up, like, rate, subscribe. I don't know what you all got to do, but yeah, see you guys next week. Peace.